Brian Jacobson. We talked to an economist earlier and other folks who are involved in the market, and they said, indeed, take this one with a huge grain of salt. Is that how we should be viewing this report?
Yeah, I actually think that would be a mistake to take it with too much of a grain of salt. I mean, every data release, you do want to have a grain of salt, probably around the rim of a margarita glass. But I think that when we're looking at this, yes, they did start the data collection a little bit later. We don't have the October numbers. But what I look for, do we have confirming or disconfirming evidence to support this? And some of the biggest drivers of inflation, so if we just look at the consumer basket, shelter costs, right? That's the biggest part of it. That has been trending lower. We know from the Zillow rent indices that inflation is on a downward trend for shelter, for rents. Then we look at the Manheim used car index. We can look at new car prices as well. Those are actually much more important than if we just think about, imports. What's going to happen there? Because imports are about 16 to 20% of goods, but goods, excluding food and energy, is only about 20% of the consumer basket. So when I looked at this, it was a pleasant surprise, but it didn't really strike me as being too much of an outlier or something that we'd want to ignore.
At the same time, Brian, I have seen some commentary already really questioning some of the BLS's assumptions about rent in particular and where they kind of put it for the last couple of months. So, I mean, is it fair to say that this report shows that the rate of inflation is slowing, but perhaps not as much as exactly as the report said?
Yeah, that is a great way to frame it, is that it's moving in the right direction, but maybe not fast enough. It's almost like you try to draw the distinction between inflation and prices, right? So if prices are still going up, that's inflation. If prices are going down, that's deflation. And it's a question of how rapidly do those processes take place. And it's just, I believe, confirming that inflation is still an issue. It hasn't gone away. It's still a positive number and above the Fed's target, but it at least seems to be moving in the correct direction, even if it's at a glacial pace.
And it also seems to be positive for the equity markets here this morning, right? Where you're seeing futures extend gains on the back of that number. How are you feeling about 2026, Brian? What do we think that holds?
Yeah, I'm thinking 2026 is going to be a pretty good period for the economy, for the markets, really. That can move according to so many different factors. Starting valuations, of course, are a big concern for a lot of people. Can firms grow into that? That's why we're positioned more towards, small and mid, also looking a little bit more at value, trying to appreciate that the price you pay for the fundamentals really does matter. And it's going to be almost like a show me the money kind of year, where we want to see, is there actually that return on invested capital for all the money that's being thrown at artificial intelligence, data centers, or any type of investment, especially since we're expecting to see a lot of investment spending thanks to the tax incentives in the One Big Beautiful Bill that allows for 100% expensing. So it's not just data centers. It could be buildings, it could be computers, it could be machinery. So really, we believe the year ahead is going to be one characterized by a ton of investment spending, but some of that is like throwing good money after bad, and that's what we want to try to avoid.
And Brian, one of my guests earlier, Steve Sosnick of Interactive Brokers, made an interesting point. He pointed out that when we got a tax bill passed in 2017, once those effects actually hit in 2018, stocks went down. And so I wonder how you think about that potential risks. Obviously no year is exactly the same as another, but given that history, how do you think about how that could trickle through into the economy and stocks?
It's a great reason to remember about the difference between the economy and the markets, right? You could see the economic numbers being good, but the markets, they could actually look at and say, well, that wasn't as good as expected, right? Because in 2017, I remember that, small caps were going on a tear because they're going to be big beneficiaries of tax cuts. Well, and then all of a sudden, when you actually got the news of it happening, they actually underperformed because the market had already anticipated. Right. So that's what we're looking for, is this differentiated view as far as what's currently priced into the market. And I just think that it's an environment which so many investors have been fixated on AI and its build out that they've been ignoring the other parts as far as where else could there be the investment spending. And then, of course, the old maxim, follow the money. right? Where is that money going to be spent? And then to really pay attention to what I think is key, corporate governance, the quality of the management, the oversight, to make sure that these aren't just vanity projects that they're pursuing, that it's actually something that's going to add value for shareholders.
And Brian, given all of that, but also given the fact we've got Micron flying this morning on its latest numbers, are you rejiggering your strategy with regard to the AI trade specifically as we go into next year?
Yes, that is something that we've been peeling off a little bit. We still do believe in the power of artificial intelligence to improve productivity gains, but it boils back to what price are you paying for that? And that's where we're looking more at, well, whereabouts in, say, healthcare? Where is it that in the service sector that this can be really used? It could be in industrials, it could be in logistics. So it's almost like the next chapter in the story for the AI build out. The first chapter was all about picks and shovels, which was with semiconductors. But then the next chapter is about the use cases and the specific areas in which you can get actually a decent return on investment. And that's where it's leading us to some of those other sectors.
Brian, good to see you. Thanks for joining us.